Welcome back, friends, to another video. This week I want to talk about the difference between cash flow and profit. Now, this is actually a very important distinction that confuses a lot of people, and so I'm going to be breaking it all down for you in this video. So many times I hear people talk about companies and stock, and they talk a lot about profit. And when I hear this, it makes me cringe a little bit because profit can be misleading. What you want to look at is both profit and cash flow. And these two terms together can give you a much better picture of what is happening in a company. I want to start from the big picture. One of the primary jobs of an accountant is to enable capital markets. In capital markets, we have businesses and investors. Investors are rich people with a lot of money that they want to be able to put to work to generate a rate of return. But investors have a problem. They do not know what is happening inside of a business. Accountants provide investors a set of financial statements to provide them insight. So accountants are enabling this cycle where investors are giving money to businesses that then pay out dividends back to investors. The takeaway here is financial statements are written for investors. This is a very specific target market. The whole reason the income statement highlights profit is because that is what investors care about. They want profit because profit will eventually become dividends that flow back to investors. The investors are looking at these documents and thinking, what is in it for me? It is important for business leaders to realize the purpose of financial statements because the focus on profit can be misleading. It is easy to bury things in the income statement if you don't know what you're looking for. For example, depreciation is a huge expense on the income statement, but it does not actually impact the amount of cash you have in the bank. One way accountants correct for this is by creating the statement of cash flows. This statement shows where the cash is going in the business, and it contains 3 different sections. Operating shows whether the core business is making or losing cash. Investing includes buying or selling investments like land. Financing includes activities like issuing debt or paying out dividends. The area you want to focus on is operating. Is the operations generating cash or losing cash? A business should be a cash flow machine, and so you should be seeing cash being generated. The point of all this discussion is to highlight the difference between profit on the income statement and cash flow from operations on the statement of cash flows. It is really important that you look at both of these numbers and understand what they mean. A lot can be hid in profit. And just because a business shows a loss on the income statement is not necessarily a bad thing. A business could generate a lot of cash, but simply invest all those funds back into the business. So the income statement will show a loss, but it could actually be a healthy, growing company. The operating cash flow is much more straightforward because it will show if the business is generating that cash. Of course, on the other hand, the business could be making sales where the cash just has not arrived yet. But that is a situation where you're going to want to do more investigating to find out why are people not paying. Now, it is still possible to hide more information in the operating cash flow. So next week, I'm going to show you how to break down the statement of cash flow even further, and this can be a very powerful way to understand what is going on in your business. If you found this video helpful, go ahead and leave a comment in the comment section down below. Thank you so much for watching. I'm Zach from Wolves in Finance. Let's go out and make some money.